Hello, everybody, and welcome to Hash Rate. My name is Mark Jeffrey. My guest today is PM PragmaticMonkey from Rujira. Hello, PM. How you doing?
Hi, Mark. Super nice meeting you, and glad to be here. Really excited to spend the hour with you, and let's explore what we are building at Rujira.
Yeah, I'm totally excited as well. I mean, I've been a big fan of THORChain for a long time. You know, kind of a big vocal fan. And I just, for those who don't know, THORChain is like this. I mean, it's called a chain, which I think is sort of a misnomer because really it's a cross-chain DEX that is powered by a chain, right? So really it's like cross-chain DEX Thor thing, right? And then the flux capacitor that makes it all work is the THORChain, right? And the magic is that you can basically you can use Bitcoin, raw Bitcoin, and it goes basically into this cross-chain DEX into any other coin on any other chain, and you can do that with any coin on any chain that's connected to it. And that is extremely powerful, and it's totally permissionless, kind of huge and cool, right? Like, how long have you been sort of watching THORChain? I know you're like neck deep in it now, but like you didn't start that way. So tell me about your sort of relationship and with THORChain.
Okay, so first you nailed it. Like it's THORChain is kind of one level deeper in the abstraction of all those blockchains. Like it's not just yet another blockchain and you need a bridge to go there and then it's an isolated island. It's actually this blockchain that connects them all. A bit what effectively the Cosmos Hub was trying to do but failed and was doing that only with a very limited scope, which was other Cosmos chain. Here, the THORChain team, GPTO, who started that, and Chad back in the day, they used this amazing Cosmos SDK technology and built a chain that really connects all the other chains, no matter if it's Bitcoin, Ethereum, AVAX, XRP now, Dogecoin, like all those chains, including some which don't have smart contract capabilities. And we are going to come back to that because that's what make what we are doing very powerful. But so it's this hub that allows any connected chain to do those cross-chain native transfer. I have Bitcoin on the Bitcoin chain. I want Ethereum on the Ethereum chain. And in a fully permissionless, decentralized fashion, I sign a transaction on my Bitcoin wallet, and a few blocks later, I get my Ethereum in my Ethereum wallet. So that's what it is. You were asking about how I got there. So I used not to be familiar at all, not at all. But I followed from far the THORChain ecosystem, but I really did not know much about it till last summer, effectively. I knew it was this cross-chain DEX, and it has this cool culture of quite a lot of OGs, cyberpunk, Eric Worre's, and this type of people, which I really like and feel like align philosophically. And so I was always following a bit, but never dig into the tech before that. And then, so what happened is, so I was mostly like I was part of the Kujira community, the Kujira ecosystem. We were this, maybe I can go back a bit on the story. Kujira started as an application on Terra back in 2021 when Terra was this big, amazing ecosystem where you could do all those things. And it was just doing, it started with one app called the THORChain, which was a very cool thing. It was effectively allowing you to, it was democratizing access to liquidations effectively. And so instead of having those typical liquidation mechanism that you have on most money markets, whether it's AVE, Compound, or any CDP markets as well, like MakerDAO or whatever, it always works the same way. You get liquidation goes like you have a fixed discount, and then you have arbitrageurs that can come, and whenever there is you have your collateral that goes below a certain LTV threshold, it become at risk and can be liquidated, and arbitrageur can come and buy at a fixed discount to market price this collateral, and in the same block usually sell it, which triggers those big liquidation candles that you see on charts. And it's only available for a few very experienced people that know how to operate MEV bots. And there is no market for it, meaning that the discount is set, and it means that effectively people who get liquidated end up paying more than they should if the market was efficient. And what THORChain was doing at that time, they managed to get plugged. So it was, I wasn't part of the team yet, so that's why I say they managed to get plugged into Anchor, which was this biggest lending protocol on Terra, and you could liquidate at-risk collateral on Anchor using THORChain via a Dutch auction process. meaning that anybody could come and say, oh, now there is this amount of Terra, or they also had like a Wrapstack ETH and a few other assets, AVAX as well, added before the collapse. And so you could come and bid on the at-risk collateral and create a market. And so you get this THORChain process where bids are filled from the lowest discount to the highest discount. And effectively, it means that it creates competition. It reduces the cost of liquidation for a liquidator, and anybody can participate via a simple UX.
Okay, Lee, there's a lot here you just said. So let me try to recapitulate it for those who might not have followed all of that, right? Because there's some people who watch this show who aren't familiar with all this stuff. So Kujira, or sorry, Rujira, it's now called Rujira.
That was Kujira at the time.
Yes, I'm getting there. So Rujira is what it's called now because it's in Rune, or the THORChain, right? So it got renamed. But it used to be this thing called Kujira, and that existed in the Terra Luna ecosystem before the collapse-a-thon, right? And there was a little moment in history where that was the hot new chain. And so all these DeFi apps arose, and this one collateralized debt position lending protocol that you were just referring to, I think you called it Orca, was part of the suite, right?
So Encore was the big, Encore, it was huge. It was the protocol that allow you on Terra to mint UST, the stablecoin that failed.
Yes.
And Orca was plugged into Encore. They managed to get plugged into Encore to allow to have this more fair liquidation system for people participating.
So the liquidations are usually for super smart people. And there's usually like not very many of them. And basically blockchains have to have some outside actor poke them to do things, right? There's no cron jobs inside of blockchains, right? There's no automated code. Something from the outside has to poke them. So when there's a loan and there's collateral, which is its value is dipped below a liquidation threshold, it's now available for liquidation, but somebody from the outside has to come and poke it and actually liquidate it. And when they do that, they can make a little bit of money, right? So it's like they get a little cash and prizes for helping the blockchain liquidate these collateralized debt positions. There used to be no competition in that. It used to be too hard for people to get into. So your protocol that you're referring to made it easy so that there was an actual marketplace and competition. So it's no longer just, 3 of my friends who can do it. Now it's like a whole bunch of people, maybe a couple hundred people that can come in there and, compete. I'll do it for this price, and it's a lot lower than that other price, right? So that's basically what you said, correct?
Yeah, exactly. That was it. So I'm sorry, like we are going on a big tangent, but you say you edit after, so feel free to cut.
Yeah, no worries, no worries. We're here now, so I might as well just, let's clear it up.
It's a long story, so I'll spend a bit of time. So that was part 1. So Kujira was just that. Actually, the day the team launched a second product, the day the UST collapsed, and it was called Fin. It was 100% on-chain order book DEX. I'll come back to that in a minute, but it launched on Terra initially on the same day as UST depegged and everything went south. So
I was actually at the time I was contemplating doing a crypto hedge fund. And so I was investigating all of the ways in which you could do custody. And I was talking to the Fireblocks guys, and Fireblocks is one of the major crypto custody solutions for, industrial grade hedge funds and banks and things like that. And they had just like 2 weeks previously to the collapse launched Fireblocks Terra Luna support, and they're like, oh my God, we're getting more transactions we've ever gotten, more usage. Like the usage was absolutely insane. And they'd worked on that extension for Fireblocks for like a year and a half.
Oh my God.
Like they busted their ass on it, and like it only got 2 weeks of life, and then the whole thing collapsed. And I felt so bad for them because I was just watching that going, oh my God, you poor guys.
Terrible. And it's a great team. Like, it's a very useful product that helps effectively bridge the gap for institutions to go on chain. And I think we need that at the end. We need capital to inflow in our ecosystem to win. So it's very helpful. So feeling bad for them, but that explains why we are in talk with them in the chapter 2 of our history. And so probably because they have done this work for Terra, it was relatively easy for them to add smaller chains.
Yeah. Okay.
So that was chapter 1. Then happened what happened. So the collapse of Terra, all this infinite meeting loop of UST, the depeg, and all those things. Everybody loses shirt in this story. So Kujira was a part of that. We lost like pretty much over half of the treasury of the raise we have made because it was in UST. But it was a team. So it was 3 co-founder at the time, and an incredible team. I was following them. For me, like I started as just a user of this amazing product that was THORChain, and then bought a bit of Kujira token. And I was just a community member, very involved, but that was it. And then on the collapse of Terra, so I was in the Telegram, and it is in crypto, and I knew like they were saying they will continue doing something else. So for me, it was like the opportunity. I was like, okay, I had a lot of fun tied into the ecosystem. I just went with everything I could salvage into Kujira, and that gave me a decent size back compared to the total size of my portfolio. And so I became kind of very involved after that into this ecosystem, because I was just very much aligned, both ideologically about what those guys were trying to do, which was really trying to find parts of the blockchain segments like de-liquidation that were not up to the promise of what we are trying to do, which is build a more fair, more transparent, and more accessible financial ecosystem for the world. And having a system where only MEV bots can participate is not really in line to that. So I was really like aligned ideologically, but then after that also economically, because Kujira was only trading in UST. So the DPEG did not really have any impact, and everybody was selling to try to move to another chain. So I ended up like with a small share of the supply, sub 1%. But for me, it was very big at the time. So I became all in, and so from there it did not miss. Around 3 months later, the team relaunched as an independent sovereign chain on the Cosmos, in the Cosmos ecosystem. So with the Cosmos SDK, same tech as THORChain. But and they started to build this amazing suite of DeFi tools. So of course the THORChain liquidation engine, but also like they started to integrate every piece of the DeFi stack you can think of. So it was this.
So like what? Let's specifically run through like what's in there. What's in the goodie bag?
Yeah, so if you had like so the core, I would say the biggest revenue contributor and the core of it was Fin, this 100% on-chain order book DEX. And I insist that 100% on-chain, I haven't seen anybody pulling that off yet, on any other ecosystem, because usually you have like, other like, order book DEX that you see on-chain. They are not 100% on-chain. You usually have the matching of order that happen off-chain. And from the moment you have something happening off-chain, it means anybody who is responsible for doing the matching of order can effectively front run the other, and there is some sort of value extraction that is possible to whoever comes first. And the Kujira team, like in line with this ethos of really trying to do things fair, managed to do this matching on chain with a 0 to 1 complexity, meaning like you can scale to pretty much infinity. The more volume you get, it doesn't increase the load on the application itself, and everything happen at the same price for everyone. So if you want to sell an asset at 100, at a price of 100, everybody in this bucket, if the price gets there, gets filled proportionally to the size of their order compared to the total of orders at this level. And so that's very unique, because we get into the nitty-gritty of how an exchange work, but those are various things that...
No, but I think that's I mean, I do think you make a really good point. So a completely on-chain order book DEX. And I've heard many people claim that they've done it. So I don't know, who's lying, who's not lying. I have heard this claim before, and everyone brings up the matching is the thing that's is impossible or really hard to do on chain. And so a lot of people cheat and don't do it on chain. They just do it off chain. They go, well, everything's a DEX except for that. Right. And they just sort of sweep that under the rug. But you guys are claiming, no, we actually did it. Everything is completely on chain. Now, don't you need a super fast chain in order to service that, or does that not matter?
No, not necessarily. I mean, like with the Cosmos SDK, it's already a super high performance tech stack, so it's really not an issue. Like we never had any performance issue, and I really invite you to go and try it at some point. Like you will see, it's fast and responsive. It's quite nice. And so you had this order book DEX, and because it's an order book, it works a bit differently. Like most of, like pretty much actually all the DEX you have in blockchains are IMM DEX. Like the IMM the automated market maker, and the DEX are one and the same thing. And you will have like typically a bonding curve that defines the price over which you get executed, and you put one asset in, you get another asset out, and the quantity you put in define how much you get out, and it's a single bonding curve. It can be a XYK all the way along from 0 to infinity or concentrated, but it's a single curve. With an order book, you can be much more expressive and you can have much higher capital efficiency. Like if there is somebody wanted to transact for 10 billion of Bitcoin at a price of 100K, and somebody on the other side who is willing to buy and the other is willing to sell at the same quantity at the same price, you can move 10 billion with zero price impact. So that's a max capital efficiency you can achieve, and that's only possible with an order book. And so we have the order book, which allows this type of stuff. And then we have, effectively, you need on an order book, like in traditional markets, to still have market makers that facilitate liquidity. And so we have the AMM part that is separated from the order book, that is a multi-strategy AMM, that is just layering different strategy on top of the order book. And the order book acts effectively as an intent matching of various sources of liquidity. And in the source of liquidity, you will have, for example, limit orders by regular users. We have different type of orders. Like, I don't know if you want to go too deep into that, but
yeah, no. I just want to get like a general flyby. So you've got the order book, you've got the DEX, you've got the AMM,
the AMM.
You have perps.
Then
you have stable coins. Like, what else we got in the bag?
So a money market, like a standard money market where you can deposit collateral and borrow. This means that we also get the liquidation engine THORChain back in the game, because if you have leverage, you need to protect the system solvency, and so you need THORChain to do that in a nice way where everybody can participate. We will have like that's very unique, but thanks to THORChain technology, we can have access with to native Bitcoin. So we'll do a Bitcoin-backed stablecoin. So that's also on the menu.
Wait! Bitcoin-backed stablecoin?
Yeah. So that's one of the things.
That's fucking awesome.
Yeah. It's big, and it's only possible thanks to THORChain. Like, this is literally the only way to do that in a 100% decentralized fashion, and without having to rely on a third party that is wrapping.
Yeah, like wrap Bitcoin or something, right?
Yeah,
like,
exactly.
Like, this is actually a really big point. So I want to make sure we don't gloss over it, right? So because you have THORChain, you can do operations with native Bitcoin on the native Bitcoin chain that you simply cannot do on anywhere else. Anywhere else, you have to have wrapped Bitcoin, right? Which involves giving your Bitcoin to like some guy who then says, here's a wrapped Bitcoin token on Ethereum or on Solana or whatever, right? But that's kind of bullshit, because what if that guy runs away and then your Bitcoin's gone, right? Like,
exactly. So that's actually the biggest. We started with the work done through the apps, but that maybe we should have started there. So that's I think the biggest point today. If you want to use Bitcoin in DeFi, your best shot, the biggest market, is to use wrapped Bitcoin. What is wrapped Bitcoin? It's a Bitcoin that is issued by a centralized custodian, so BitGo in that case. So you have to trust BitGo, which has probably like a 3 or 5 multi-sig or something like that, which we have seen again recently with Bybit can be hacked, and those happen. And then they custody it, and then they issue a representation of it on Ethereum blockchain. And then if you want to use it on Ethereum, you can use this wrap version, or you may want to use it on another ecosystem. Then you will use a third party bridge, which is gonna also add an extra layer of exogenous risk. And you will bridge that to another ecosystem. And then you have your wrapped bridge Bitcoin. And that's just add like 2 layers of exogenous risk and trust and centralization. That's, you don't have to, thanks to THORChain technology. And that's really the biggest, the biggest win for us. So we had all this amazing tech we built on Kujira. The issue is we were competing in a very small ecosystem, which is the Cosmos ecosystem, and a small chain inside this ecosystem. And we are struggling to attract liquidity. We had like built an amazing rocket, but we had no fuel to make it fly. And THORChain solves that. And not just solve that by bringing some like bridge liquidity. It solves that with the most elegant way possible with native liquidity. And now, so thanks to THORChain, it means that you can.
Yeah. So let's just give people like sort of a scoping of the size here. So the last time I looked, like the amount of TVL or total value locked in DeFi in Ethereum was something like $80 billion, something like that.
Yeah, I think that's about
something like that, right? And then I looked at, and then Solana is like about 8 billion, right? So it's 1/10 of what Ethereum is, and Ethereum is like roughly half of all the TVL in DeFi. But if you compare that to Bitcoin, Bitcoin has $2 trillion worth of liquidity in it, right? And mostly just sitting there, right? Like it's like there's Bitcoin sitting in people's ledgers in their stock drawer. And it's not doing anything, right? Because it can't do anything because you can't. There's no smart contracts, right? And you have to wrap it. And it's something like 1% of Bitcoin is wrapped Bitcoin. So some Bitcoin has been bridged over, but 99% of it's scared, right? And properly so, because people have gotten burned by Celsius and other things, right? So people are like, yeah, I don't, it's gold. I just want it to sit there. I don't want to do anything with it. But if there was some way to safely get yield or make it do things in a way that everybody felt very safe about it, more of that 2 trillion would move into an ecosystem that provided those opportunities, or at least some part of it would, right?
Exactly.
That's what you guys have done.
That's the thesis. Like we don't need, and we will never get even like 50% of the Bitcoin supply, because most of the Bitcoin hardcore maximalists, they don't want to do anything with their Bitcoin. But there is a big part that at the end, you can have a big stack of Bitcoin, but if you keep it in your drawer and you don't use it, then you don't enjoy the financial freedom it gives to you, because you cannot monetize it in the real world. So either at some point you need to sell some of it, or if you believe, which I think is the case for most people, that in the long run, governments are going to continue to be completely irresponsible, and the only way out of the massive debt we have is to print more fiat currency to repay the current stock of debt plus serve the interest, then it means that the quantity of money, fiat money in the system is going to continue to increase exponentially over the long run, as it has been the case already for the past 80 years or so. Yeah. And that means that Bitcoin, which has a finite supply, is mechanically going to appreciate in dollar value, just because now there is more dollar in the system and there is the same quantity of Bitcoin. And so it's a denominator effect. It's mechanical. And so it makes Bitcoin like the pristinest form of collateral you can imagine. And so it makes it the perfect asset if you want to still finance your life, but you don't want to sell it. Well, you can borrow against it at a safe LTV level. That's one way to use it. So I think, and doing that, you could do either with a money market and borrow USDC against it, or you can also do that via a stable coin that allow you to mint a new token. And that's another way. It's the same mechanism, but it's another way to get some money out. And then you will have to have liquidity for this stable coin towards something that you can off-ramp. And so it's a big, like long-term project, but the potential is just massive. And that's true for Bitcoin. So what THORChain gives us, it allows us to give access to DeFi with native assets. And that works for all connected chain, including those chains like Bitcoin, which up to now don't have an app layer because they don't have smart contract. Now they will have an app layer with smart contract. They will be able, a portion of the community that is interested into that will be able to do all those cool DeFi stuff that we have been doing in other environments. But it's also like very powerful, because it's not just the case for Bitcoin. It's also the case for all those other connected chains that don't have smart contract. So of course we have THORChain is connected to Ethereum, to Base, to Avalanche, but those chains, they have smart contracts. So for the user there, it's nothing crazy. But if you look at, like, you have THORChain, Bitcoin Cash, Litecoin, XRP now, like those.
Does XRP have smart contracts? I actually don't know. Does XRP have
they
smart contracts?
They don't have smart contracts. They have some form of side chain, like it's very small. Like they don't. It's similar.
XRP is the weirdest beast. Okay, but anyway,
it is.
There, but it's an oddball.
But it's huge. It's a top 10. So it's also like a very material amount of capital that can suddenly be unlocked into DeFi. So that's really like the very exciting stuff. Like it's not only you get access to Bitcoin, but you can also get access to all sorts of other ecosystems. But the beauty of it as well is, so everybody is like, we are building the decentralized Binance. Like it's been a big meme that a lot of people have been saying, but that's also what we are trying to do. But I think we are in the unique position to actually deliver on that, because this tech allows us to put in one place on THORChain all together those native assets from all those connected chains. The same way that when you are on on Binance or any centralized exchange, you can trade your Bitcoin and your XRP and your THORChain all from your same little account. That's exactly the experience we provide, except that it's 100% decentralized and 100% trustless and permissionless, and everybody can do it, and nobody can censor you. So it's
so no KYC, no
KYC
on the account, any amount. Yeah,
pure DeFi, exactly. And we will have we are partnering for on-off ramping as well directly on chain via a partner called Banksa. So if you want to off ramp, then if you want to use that, you will have to KYC above a certain threshold. You can still on-off ramp below. But if you just want to use the system, you have absolutely zero restrictions, zero KYC. It's just a bunch of protocol, so a bunch of rules of set into smart contracts that anybody can access and that don't discriminate.
Yeah, no, that's amazing. So, okay, so you build all this stuff in Terra Luna, and then along comes JP Thor.
So maybe I need to give you chapter 2 to finish chapter 2 because what happened?
I'm jumping ahead. Go ahead.
So Terra has collapsed. We relaunched as this independent chain on the Cosmos. And the issue is it was very hard to attract liquidity. So it pushed the team at the time to take some mismanaged, miscontrolled risk. And they were borrowing USDC against Kujira, the native token, to just try to bootstrap liquidity in this ecosystem. Because again, like a great rocket, but no fuel. And the issue is it's perfectly fine to borrow against your token as long as you have a borrow cap that is a function of the on-chain liquidity. And what you want is just to make sure that at any point in time, if the price goes south and your position needs to be liquidated to stay at a compliant LTV level, you need to have enough liquidity on-chain to allow people to come liquidate you without crashing the price to a level that again put your position at risk. And they did not put any cap at the time. So it was just over optimism from the team. I think founder overconfidence. And unfortunately, this ended up poorly in August last year when I don't know if you remember, it was this big macro event, the unwinding of the Japanese carry trade. All market crashed, equity markets and crypto, of course, the same. And during that night, it was the 31st July to the 1st of August, I remember.
You remember the date?
Yeah, it was quite
whatever this was.
Yeah, it was a traumatic event. And the debt position of the team got liquidated, and it wasn't enough liquidity to safely bring it back to a compliant level in terms of LTV. And so it created 3 million of bad debt in the ecosystem. So 3 million is peanuts if you think about what happened with THORChain or all those big ecosystem. But for us, it was big. So at that point, it had a few things changed. First, one of the 3 co-founder had to leave. And they asked me to join. So I was already working super close with the team and 200% in this ecosystem for 2 years or so, since the collapse of Terra. And they asked me to join to help them first, make sure that this type of misparameterization don't happen again, and so have kind of more strict control on protocol parameters, and also help with trying to find emergency capital to repay this bad debt and find a path forward. So I joined the team in an official capacity from that point in time. And that's also the time where we met JP Thor. And JP Thor, so he's a very interesting character, but he was great. He really gave us the lifeline we needed. He had this vision. I think he's very good at having big macro visions, and he had this vision of building this app layer on top of THORChain. But it's a crazy amount of work, and finding a good team to do that is very hard. And he was able to recognize very early, because he did not really knew us. And I think now he's quite pleased with what we have done, but he had no clue at the time. Yeah. And he took a bet on us. He backstopped an emergency sales of Kujira we did to clear all the bad debt in the system. So we raised 3 million and we were able to clean up everything. So all the lenders were able to be repaid and everything was back to normal. But we did, on the back of that, this deal where
so JP bailed you out.
So basically. So it was a bailout, like crypto bailout. So he bought a big position on of Kujira via sales of treasury token, and then we did this deal where we agreed to effectively migrate. We will eventually sunset the Kujira chain and go and build this app layer and replicate an even better version, sometimes I use this crap. Capitalize on all the lesson we have learned during all those years and rebuild the same thing, but even better inside this amazing framework that THORChain offer to us, which is access to DeFi with native assets. And so,
okay, so let me just recapitulate. So you guys built this really great stuff, this really great DeFi engine, but it was like, in the middle of the forest. There was no foot traffic. Nobody ever came. So nobody could find your awesome store because nobody was walking around over there, right?
It was a bit. We had like a very faithful community of we have also
so you had some hardcore people, but like who cares? It wasn't like
it was a very small tribe that could not grow.
Yeah, it doesn't. So you were like a rock band that had 5 core people that loved it, but like you weren't going to be playing stadiums anytime soon, right?
Exactly.
So, because you never get any radio airplay, right? So along comes Thor. He's got THORChain. THORChain, would say what you want about it. It's always been pretty big, right? It's always been pretty well known. It is in the mainstream. It's in the mall, but it's also not growing very fast, right? Because there's nothing to stimulate its growth, right? Like getting new users is hard. But if there were apps on top of it that did things that were bringing more people in, and so he's got like a bunch of liquidity, but no apps. You have a bunch of apps, but no liquidity. So you all looked at each other and said, you got peanut butter, I got jelly. Let's make a sandwich, right? Like that's sort of what happened, right?
You are great with metaphor. That's love it. That's a great summary of the situation. Yeah, it's exactly what happened. And so on the back of that, we decided to do this bigger merger deal. So we merged together Kuji, but GP also wanted a dedicated team to do perps. So we got the Levana team as well to join. And we had a few other teams in our ecosystem. One team was building NFT marketplace. So we put them on board as another core vertical. Another team was doing the launch pads. So it was a joint venture already with the Kujira team, but we bring them back in. So we merged all those teams and all those smaller tokens, but the big one was really Kuji, and the second biggest one was Levana, and created this new token, Ruji, which is the token for the app layer that effectively give you access to half the cash flow from all those apps. I say half because there are nuances in that, but effectively we have to pay THORChain for the economic security it provides to us and the access to those native assets. And so we agreed initially on this 50-50 split. So every single apps, unless it directly generates revenue for the app layer because it does swaps on the base layer, otherwise we have to share 50-50 the revenue with the base layer. So then it's also how we align interest, and we accrue direct value. We will accrue direct value to rune holders and to you know how it works on THORChain. Like you get revenue that flows for revenue from a liquidity fee that flows into the gross system income, and then it's split between bonds, node operators, and LP depending on the incentive pendulum. Well, now you will get a new stream of income to increase this gross system income, and that's the revenue from the app layer.
Yeah, what is THORChain making for revenue per day right now? Do you know the numbers?
Yeah, it's around between, let's say, 50 and 80K per day. So it's a very profitable business. Like it's for blockchain, if you compare to most other blockchain out there, it's great. Like,
and that's all revenue is pretty much profit.
So the way it works is you get that 50 to 100K per day, depending on volumes. That flows as gross system income. Of that, 5% goes to the dev fund, which is used to fund the 9 realms and all teams contributed to build this ecosystem. You get also now 5% that goes to buy back Rune and burn it. And then the remaining 90% is split between node operator and a liquidity provider, depending on where the incentive pendulum is. And
and TCY holders now.
And now, you're right. And so sorry, you also
I'm
have
a TCY
to withdraw.
holder, so I'm like, I want my 10%. Like, you're not gonna. I didn't hear me in there. I got to be in there somewhere, man. So,
my bad. You get also 10% taken from for TCY now and at perpetuity, and then the remaining 80% flow between the LPs and the node operator. Very good.
I'm getting to wet my beak there. That's good. I like that. So
but yeah, so it's a very and now like since the blow up of THORFi, they removed inflation as well, and that's been very successful because historically, like it was a cost. You were asking if it was it was pure profit. Historically, it was a cost when they were also adding to gross system income inflationary rewards, but you actually don't need that, and they removed that, and it hasn't changed anything except that it removed sales pressure on Rune, and it just worked perfectly now because those inflation were effectively a cost for the protocol that did not need to exist. Like people were happy, like we can see now they're happy to receive just the pure cash flow from the economic activity to stay as a LP or to stay as a node operator. And so now effectively it's all the revenue equal profits with the split we mentioned, but so 80% of the revenue is profit for LPs and node operator.
Okay. So now is Rujira's up and running, right? Like it's been, and it hasn't been very long, right? It's been only like a month or something like that. How long has it been up, and is it, how much of it is up?
So it has been a very long journey because first the start of it, we had to, so THORChain was built with a very old version of the Cosmos SDK. So we're at version 46 and the latest version was version 50. And so it looks like nothing, but we had to do like a bunch of upgrades to get them up to speed to the latest standard. So that was a first big thing we had to tackle, a big hurdle. We did that thanks to our it's one the Kujira main technical co-founder, Code Hans, is an amazing. Like it's a 1 in a million dev. Like without him, none of that would be possible. Like he's really like it's a gift it was a gift for the Kujira community, and it's a gift for THORChain community because he has been like inspiring all those change at a speed that is incredible. And now like working very close with Narim on all those things, but it was all him. So it was, well, actually it was Strange Love team also helped with part of the things, like the upgrade to Cosmos SDK 50, they were there. But so it was this part that needed. Then the support for those secured assets. So what we call secured asset is effectively this capability to get those native assets from all those connected chain into THORChain. So instead of having to use those third-party bridges and wrapping by centralized intermediary, the way it works is you can deposit Bitcoin in one transaction in what we call an Asgard vault, which is a multi-party computational vault that store your assets with a private key that is secured by 120 node operators with a private key that churn every 3 days. So it's it's still a trust model, but much more secure and much more decentralized and way less trust-based than anything that's like a centralized exchange or any 3 or 5 multi-sig. And that allows us to connect all those chains and get all those assets as what we call secured assets, which are effectively representation of those assets locked in those vaults on the app layer. And then that's where we can use them to do all sorts of things into DeFi. So we need to add this concept of secured assets to be able to have access to that. And there was a bunch of other like technical hurdles we had to overcome. And we had also to go through all sorts of audits and things and reviews internal with, of course, the 9Rim team and external with other auditors involved. And all of that is done now. 2 weeks ago, we finally were able to, a month before that, we launched the first smart contract, was a merge contract, allowing finally people to come and deposit their Kuji, LVN, and all other token participating in the merger into this contract. So we haven't minted, or we haven't distributed Ruji yet, but now people are in there and they are earning rewards. There is a mechanism with a decay, probably no need to enter into the decay, but you can already have your claim on the future Ruji that's gonna be launched probably by the end of the month if everything goes as planned. And so that was the first app, the first smart contract. And then we also launched like finally the first app 2 weeks ago. So the 100% chain order book DEX and the first version of the IMM. So we call the order book DEX Ruji Trade and the IMM Ruji Pools. And with a very simple strategy, XYK strategy, it's replicate a Uni V2, but in an order book. And we launched that with a very limited set of tokens, just the 3 ecosystem tokens that are migrating from Kujira to THORChain. So for now, there is no BTC, no ETH, no big pairs. That will come in the next release.
So you've launched something, but it's pretty sort of a small subset with no Bitcoins, really.
Exactly. It's really just a proof of concept for now, to test things, to refine the UI, to really get things ready. And also because we have to do things in steps. It's all not that trivial. So for example, the next big step will be to create a different market making strategy for Ruji Pool that will allow us to virtualize the liquidity of the base layer pool. So that's going to be a very big one. That's how we are going to be able to create trading pairs for all those assets that exist on THORChain base layer pool. But we cannot do that. Like we can't simply tap into this liquidity in an atomic fashion. So we cannot do something on the app layer like a market order in the order book, and in the backend it's do a swap in the base layer pool to fill the other side of the order. It's not possible because the way THORChain works to protect against MEV is that swaps on the base layer are always executed at the end of the block, and they are always ranked by a price impact, from the one that has the lowest price impact to the one that has the highest. So to achieve atomicity with, so we are, Rujira is not a layer 2, like it's on the same, is on THORChain. It's a Cosmosm smart contract environment inside THORChain. So we share the same consensus and the same block time. However, because of this mechanics of base layer swap always happening at the end of the block, we cannot have atomicity. So we need to create this strategy where effectively you will be, it will allow people to be a market maker in single-sided type of pools. So actually, if you have Bitcoin or stablecoin and you want to be a LP, you can do that with no EL because this strategy is just a single side. And what this strategy does is effectively, it allows to provide a quote. The strategy will be able to estimate, okay, if, let's say you have like a 10K USDC, you want to buy Bitcoin. The strategy will be able to say, okay, if I have 10K USDC, how many Bitcoin can I get on the base layer? I would get 0.1 Bitcoin. Okay, so I'm gonna me as a LP in this strategy, I'm gonna actually borrow the Bitcoin for just the duration of one block, use it, give it to you so you can execute, like I can be the counterparty of your swap.
Yeah.
And then at the end of the, I receive your USDC, and at the end of the block, I'm going to swap those USDC back on the base layer, receive the Bitcoin back, and I will have priced you a slightly worse price than if you had done this swap directly on the order book on the base layer, because I need to have a little margin in case the price I get is worse than the expected outcome, depending on what happened inside this block. And then I get the Bitcoin in the next block, and I can repay the loan. And so it's like an arbitrage strategy with a very tiny margin, but that you can repeat very high capital efficiency, and you can repeat block after blocks to virtualize the liquidity, 160 million of liquidity in the base layer pool into the order book. And then on top of that, we are going to add a ton of new strategies. So things like consolidated liquidity strategy, like Uniswap V3, like you define a range, and within that range you can provide. We'll have we have some specific type of order which are called oracle orders. You can think of those as limit order, except that instead of putting an order at a fixed price, you put it at a fixed premium or discount to an oracle price, which in that case is the price of the base layer pool. And so that will allow us to also create alternative market making strategy. And then the goal is to create all sorts of different strategies and onboard third-party strategies to also come and build their strategy that will add liquidity to the order book on top of the liquidity provided by the base layer. And that will effectively, especially with those oracle orders, you can then build a layer of strategy that trade once against another. And as long as there is volatility, everybody makes money. Some people have EL risk, of course, but that's a consequence of providing liquidity in pair.
Yeah.
And effectively, all of this economic activity then creates fees that are then sent to Ruji and to the base layer. So that's the vision. So we are just starting with this very small subset of tokens, ecosystem tokens to showcase and stress test things. Then big milestone will be when we create this virtualization strategy, which is high on the line. Like I don't want to put any timing, but it's going to be the next big stuff we are going to work on once we are done, like profiling the basic block we have already built. And then after that, it will be a game of adding more and more market making strategies that live directly on the app layer to deepen the liquidity of on the order book and increase volume.
So when do you think we're going to reach the nirvana of decentralized Binance, you know, kind of running at full power? Like, you know, I know you don't want to put dates on things, but just, but I don't know, just I guess.
I'm sure like people, everybody in crypto wants everything now, but I would say like it will take us probably a good year to really.
Yeah, okay. It feels like a year to me too. I was going to say it,
because
like
it's a very packed, like there is a lot of things to cover. And like we also want, like, I mean, we have this vision, like there is something I really want to implement. So one of the key success factors of THORChain has been the affiliate model. You know, like you can just go and add a fee on top of what the protocol fee is. And it allows it gives a way to all sorts of front ends and integrators to monetize swaps on THORChain. We want to replicate this model, but even like so it's more complicated because we have a lot of different products with different type of fees. So it's a bit more of a challenge, but also what I want is not just, an affiliate fee, because the issue is the affiliate fees that you charge on top. It means that, nobody can be as competitive as you, in our case, we'll have our own front end, the base layer, and you end up like adding a cost to the end user. And we want to also have a model, what I call referral fee. So I make this distinction: affiliate fees, what you charge on top, like THORChain, and the referral fee will be something we take out of our revenue, but that doesn't increase the cost for the end user. And that means we can go, and if we can replicate that for all our product, like we need a generic framework, we can then start and do the same as centralized exchange, go to key opinion leaders, give them a referral code, and then they get a kickback every time people trade with or do any sort of things on the app layer with using their code without increasing the cost for the end user. So that's quite powerful. But we can also then do that for third-party strategists. Like you can build a vault, a custom vault that will add liquidity with whatever opinionated strategy you have on Ruji Trade order book DEX. And then you can put a management fee and the performance fees on this vault. And then you can effectively tap into the decentralized workforce we'll be building. And you can have people that just go and pitch your strategy to family offices, hedge fund, whoever. And whatever TVL they can bring in, they get a cut on that for as long as this TVL remain in the vault and keep generating fees for the strategies. So it's this type of stuff allow us to also get much closer to parity with centralized exchange. We want to also add like stuff like one-click trading, so you can give an authorization for a certain period of time for certain amounts to do everything in one click, and then you don't have to sign every time on your ledger or on your in your wallet. We want to build this have this vision for Ruji League. It's going to be a great. So everybody does point system, but we want to do that a bit differently. So we'll have a point system with competition, like a 6 weeks period. A leaderboard, but the point in the leaderboard are a direct function of how much revenue you generate for the chain. So we really align interest with different tier of leagues for different size of wallets, because of course otherwise people who have the most capital will always be at the top. So we'll have different tiers, but then it allows to create like so gamify this experience while having a way to increase economic activity in the network and reward people that use the product the most and generate the most fees. So they effectively via this system get back a portion of the fees. So ton of different things we want to do, but there are also like some more fundamental things that will require a dialogue with the broader THORChain community. And notably, we are talking earlier about this Bitcoin backed stablecoin. That's something I'm super excited about. I think this has a tremendous.
Yeah, let's talk about that. I'm actually really interested in that. So how would that work? Are you going to do like an Athena thing? Like, how will it work?
So Athena works with Athena is synthetic. Like you don't have any. Well, you do have collateral because you have the wrap stack ETH that is used as collateral, but then they use perp markets to to carry trades effectively and harvest the funding yield. I mean, we could do something like that, but I don't think that's the optimal design because you rely on having always negative funding rates on your position.
I mean, it's worked so far.
So
right?
exactly, it's worked so far. But will it work like that forever in 10 years? Like we really try.
Well, the Athena people will say, like, even during the shit show of the Terra collapse and FTX, like we had two, complete catastrophes in a single year, and even then, over the 3-year period, the carry trade did work.
It's a fair point. I mean, we could look at something like that, but I'm not sure that's the best long-term design. I mean, we could also experiment with that, but there's also the big difference with Athena is what they use as collateral is wrapped stack ETH, which itself has a yield, which even in a scenario where, let's say in the long term, your average return on your carry trade turn towards zero, you will still have this extra yield that will cover the cost and that allows the system to self-perpetuate. Bitcoin doesn't have yield. I mean, you could say that the basement of fiat currency is the yield, and so the value will always increase. But it's a bit of a different design. So I think at least we will start with something that is much more like a battle-tested and it's a standard CDP model like MakerDAO, where you can borrow up to a certain LTV, and if you get below this LTV, you can be liquidated, and that's also give an opportunity for people to effectively participate in liquidation via THORChain, the liquidation engine. And when people go to the gen and don't manage their debt position well, it's an opportunity for other people to buy into it at a discount and redistribute the wealth. So it's great. You keep the cycle going and money transfer from impatience to patience, and from people with high risk tolerance to people with lower risk tolerance. But like all in, it's healthy, like to keep the cycle of boom and bust and concentration and redistribution. So idea adds fun to the game. But most importantly, it's a very robust design. It has been around since the very first.
We all know how that one works. So that actually makes sense. So, okay.
So it would probably be that. However, no matter the system, whether it's with ITNA type of model or with a standard CDP model, the issue is THORChain is a very unique beast with when it comes to security. And so you have this concept of security budget, where historically up to very recently, you always need to have $2 of rune bonded for every $1 of assets secured by of exogenous assets secured by the network. And that's like for a long time, like up to recently, we did not have enough security budget to even launch the app layer. And then it was this raise the bond campaign.
The bond your rune campaign. I remember
exactly.
that.
So raise the bond, that was one. But also they started to relax the security budget because at the end there is a lot of hypothesis backed into this security assumption. Like people who put the capital at risk are the one who put the capital at risk, but it's not true because now like people can bond with node operators, so the node operator could with a fraction of the cost go malicious anyway. Also, the system does not track what's the average entry price of everyone, so you don't know. Actually, maybe somebody has been accumulating a ton of runes already, and it's just waiting for the price to go up and to rug the entire system. Like reality is the system is already optimistic, but without recognizing it. I think it's good. That people in the THORChain community have this very strong sensitivity to risk, and I think a lot of people got hurt and traumatized a bit by the blow up of THORFi, and now they doubled down on this. But effectively, if we really want to compete with all this other ecosystem and we really want to scale, one way or another, we'll have to go around this security budget. So there are different ways of doing that. One is to just go like, okay, let's become like any other blockchain, like Ethereum, or people will say, yeah, but this blockchain doesn't secure exogenous assets, which is a fair point. But you can, it's a bit of a mind shift. You can say people are not bonding now. We're going to relax
the security a little bit because we're probably, it's like, look, the security is not as good as we thought it was anyway. And it's probably fine. And so let's relax a little bit so we can hit our bonding requirements. And then actually launch this thing, and then let's get in the air, and then worry about fixing it later. But it's kind of what you said.
Yeah, not let's get in there and worry about fixing it later. No, it's more like it's a change in mindset. Like for example, when you buy a stock in a company, you don't buy it because of the value of the asset on the balance sheet. You buy it because of the future cash flow you expect to get from this stock. And here, like with this security model, we are constraining the growth of THORChain. And especially at the moment where you will need, so whenever the security budget goes down, you prevent new capital to enter into liquidity pool, which is productive capital that allows you to generate revenue. And that's the time where you will want to keep this capital and even increase it, so you can increase your revenue and increase the value. So it's kind of counterproductive. So instead of having a backward-looking approach, it's to more having like a equity type of thinking, where effectively what your basic assumption is people are here buy Rune and stack Rune and bond Rune because of the future cash flows they can get, and let's just maximize those future cash flow, and that will make Rune more valuable as an asset, and the price will go up, and the security of the network will scale up, which is how most of the blockchain
that makes sense.
And why is it important in the context of decentralized stablecoin? Because if you create this Bitcoin-backed stablecoin, and we really want it to become the major stablecoin, like the golden slave stablecoin backed by the most pristine collateral in a purely native fashion, which is an incredible narrative. It's likely going to take a lot of economic security, because every time somebody come and deposit Bitcoin, it's taking some of the security budget. So we'll have to either relax the security budget, or some people have been suggesting like some alternative model, like with cold vaults, where effectively you will not have all the liquidity available right away, but you always have a buffer that you can withdraw. The rest is stored in external cold vaults, all like secured by smart contracts and by the node operators. But like it adds a bit more complexity to the system, and it can potentially add a delay between the moment you try to withdraw your collateral and the moment you can actually get it back on Bitcoin. But maybe that's an acceptable trade-off for security. But so we will have to solve this big question if we really want to be able to scale the app layer, and especially if we go with this Bitcoin-backed stablecoin. This is something we'll have to sort out. And the other corollary of that is, if you create this stablecoin, you also want to export it, because right now all those assets you can import them to THORChain, but you cannot export them. Exporting them again create a very big security conundrum, because then they are outside of your ecosystem, so they are not even generating fee. At least when they are in the ecosystem, they are being used in DeFi and all those apps, and in theory, they generate cash flow for Rune. But if you export them, then they are being used in other ecosystem with other apps capturing the fee, and you don't get anything, and still you pay for the security budget of that. So, and if we have this stablecoin, we want to be able to export it massively. And if we really want to win and make it a standard, that you can use across the place. Yeah, you got to be a big stablecoin. So that's a big discussion that will need to happen, and we need to find solution around, is how do we solve this security issue, security question, and make sure we can scale that. But I'm sure like there are technical way to do that. We just need to reach both a technical and a social consensus around how we tackle that, and then the sky is the limit. Like, I mean, it's so appealing.
All right, PM, we're coming up on the hour here, so I'm going to wrap it up. Is there anything that I didn't cover that you thought I should have asked? First of all,
no, really. I think we went through a lot of things. We could speak about a ton of more stuff. We could go for another
2 hours, but
we can do that another time.
We must end the show. Yeah. So where can people find you on X, and what are your websites, and where can people find the products that you have launched so far, such as they are?
Okay, so on X, I'm PragmaticMonkey, easy to find. And for the product, like best place is just go to Rujira.network or find us at Rujira.network on X. Join our Telegram. That's where most of the community is. If you are more of a dev, you want to build, so you are very welcome. We are trying to onboard a lot of different builders, so you can be in touch directly with me. And the best place to do that is also either Telegram, or you can join our dev Discord, and that works as well. And just very excited to get a lot of people from the THORChain community to start using our products once we scale a bit the liquidity. And I'll be happy to come back. Like, there's still a ton of stuff we could have covered, so happy to come back another time to maybe even work through the products once we'll have a bit more to show, and show you firsthand what it looks like. And actually, maybe I'll send you a bit of fund, and you will play with it and you tell me in live what you think of it. That would be fun.
Yeah, no, I'd love that. And thank you so much for coming on today. I mean, as I mentioned, I am a TCY holder, so I am very interested in what you guys are doing because I make a little bit of that, right?
Yeah,
so
of course.
I'm happy to hear about all this progress. So thank you.
And by the way,
PM, thank you.
You will have the opportunity to use your TCY also in the app layer. So we have already built an auto compounder, one of the teams. So if you want to just stack and increase your TCY position, you can. And if you want to trade it, get out in another book at a certain price, you will be able to do that as well. So a ton of things you will be able to do with your TCY. We are increasing the utility. So not only just increasing the cash flow, but also the utility of what you can do with it.
Super cool. All right, everybody. My name is Mark Jeffrey. This has been Hash Rate. We'll see you all next time.